and welcome back to my channel. I hope that you guys caught that video we did 2 weeks ago, the day after 4th of July, Tuesday evening, because oh my goodness, seriously, here's the deal. We caught a ton of pips, like in 20 minutes or less. So I'm excited to go through all of these. I think it's 8 trades, 1, 2, 3, 4, 5, 6, 7. Oops, 7. 7 trades that we looked at. That's over 1,200 pips. And if we look at them, remember the rules were set in front of you. You can see that you can accomplish the same exact thing. Again, don't listen to me. Go to babypips.com. If you have never traded before, don't give anybody any money under any circumstances. Just literally go to babypips.com. In my description down there, there's like a link tree. It'll give you all the brokers, of course. You can sign up with them. I am affiliated with them by all means. Set up a paper trading account. Wow, you can't talk. So set up a paper trading account and just start demo trading. Get comfortable on babypips.com. They do an impeccable job of teaching you the basics, and maybe just consider following along with me on these YouTubes every couple of weeks, 20 minutes or less, and get your feet wet. Once you have seen that, hey, this might be for you, hey, this is something that you can grasp and would like to get good at, to kind of get your freedom back, to get the financial freedom, the time freedom, and really the skill set to live life on your own terms, by all means, then come back to my YouTube. You can come and take a look at any of the groups that I coach within. You can pick any strategy you want. I'm an advocate that almost any strategy has the potential to work with the right management in place, and then get started, because this industry can literally change your life. So with that said, of course, we have to show the disclaimer real quick that says, don't trade what you can't afford to lose. This is not a class per se, but this, recording is for educational and trading purposes only, not to be considered financial, legal, or investing advice of any kind. I, of course, practice high risk, high reward trading. You can follow simpler steps and similar steps with safer, lower risk, lower reward trading. With that said, of course, please make sure you like, comment, subscribe, and all the stuff that helps YouTube decide to, pump up the volume, like that song that I, for some reason, just thought of. Now, let's go ahead and get to the charts and take a look at what we were able to accomplish literally in a couple of minutes. We also have a few trades that we're going to share with you as well that I think has a lot of potential to, pay out over the next, week or two. Okay. So on July 5th, which, that's US time, and we were looking at the July 6th, 1 o'clock candle, we looked at a total of 1, 2, 3, 4, 5, 6, 7 trades. As you can see, they're all highlighted on the bottom of the screen, right? And we're going to go through each of those as quickly as possible. Those equated to be approximately 1,200 pips of a move so far. And mind you, some of these have some more room to run. As you can see, the one I've got up right now is consolidating a bit. It still technically has some more room. So the first thing I'm going to say is, of these 7, 8 trades, some of them have more room, so please do keep your eye on them. But of course, we're going to clear the board, and we're going to look at an additional, on top of those, what is this, 3, 6 more trades as well. So I hope you're as excited as I am. Let's start from the very beginning and just work our way through. First things first, we annotated this last 2 Tuesdays ago. So I'm going to try to find that exact price point, which is July 6th. You can see at the bottom of my screen, 1 o'clock candle, really zoomed in. You guys get the idea. This so far has moved about 82 pips. Mind you, it's pulled back, it's retested, which we knew. We anticipated a pullback in this range. We got the pullback, and now, of course, we're looking for the continuation. So that was one of them. Technically, this still has some more room, but I'm going to go ahead and clear the board. So I'm going to hit objects, make sure that I remove all of those, although I probably could have kept that. Take it off of my watch list. Ta-da. Next that we looked at on July 5th, technically US base time, is GBP-CHF. First and foremost, I want to say again, I think this has more room from where we're sitting right now. We looked at this particular pair. We were waiting for the breakout. We bought at fractal. We know exactly that we're protecting within 50 pips or so. We know our stop loss is going at structure. You don't have to know a lot. You don't have to be able to read all this stuff. That's an additional 180-ish pips, right? Beautiful possible trade. You know you're protecting within 50 pips. You know you're either micromanaging and trimming some of your profits down. You're dragging and dropping your stop loss into profit. You're applying a trailing stop, or in my case, I've got trade management. So 180 pips, definitely not a bad way to be. As we're looking at this now, we've got a nice breakout. We retested. We broke out again, retested. I'm looking for this to continue up. So again, another trade that has more potential even today. So I'm gonna try to go through this fast. This is more pairs than I typically have. AUDCHF was one of them. Again, beautiful possible entry here. Let me see. I gotta go to my paper. One of them we were in now. This was the one we said, hey, we're getting in this now, mostly because I was already in this now. So let's just take a look. That's July 6th. If you look on the bottom of my screen, scrolling up, you kind of get an idea. This is about 150-ish pips. That's 3 times the minimum that we need to protect. So the rules are spelled out. We don't have to redefine them. We don't have to reinvent the wheel. Beautiful possible trade. I don't think there's as much room on this one. I think there is still some room. We've got another buy setting up currently. The break of this fractal, we know where our next target is going to be. It's going to be right here at this void. So not a bad trade setup for those of y'all who are looking. But otherwise, I'm taking this off of our watch list and saying, okay, we're done with this for now. I do kind of like it. It's got a brand new signal too, but I digress. Australian chef, look how fast I can talk. I'm sure I'm going to get loads of comment on that too. But purpose is to get through as much as humanly possible here and to show that it doesn't take much time. Again, 128 pips. We never made a lower low. Remember, we're looking for a stop loss at the break of structure plus about 1 ATR, right? 1 ATR room of cushion, trying to give room for a spring, right? We're using the 1 hour for all of this. We're not bouncing around. We're not having to know market analysis. We're not having to know technical analysis or fundamentals. This is through NFP. This is through all the craziness that the market can give us. And ta-da, still, again, beautiful pips. About 129 pips is what I got out of this. And also, I still think we've got more room. We anticipated a pullback. It didn't actually make it up to this region that I was looking for. It did come up to this void. We've got our pullback, and now we're just kind of consolidating. I'm looking for this to come all the way up into this area. So don't sleep on this. Make sure that you're keeping your eye out. And I'm going to remove these, although I kind of should keep them, but it is what it is. AUDCHF was another one. I'm still in this chart. I've taken a couple of entries. I capitalized on this move, and now I'm capitalizing on this one. But same kind of concept. I know it's messy. I know we're machine gunning this. It's also just to show you what's possible. So there we go. We've got about 42 pips. Notice this one is really not in range. But also notice if we're looking back at 1 hour structure, we never break this 1 hour structure. Better yet with the 1 ATR room. And if we need to measure it, we can. 1 ATR, we have an idea. Since the entry, and I'm keeping my crosshairs pretty still. And of course it did. It formed another double bottom. But we've got about 79 pips on the table. So even if you're counting this one as a wash or saying, hey, this one's questionable, by all means, take this off of your total pip count and say, okay, what's still possible? Because I get it. Everybody wants to come to the table and have a reason, have a why something does or doesn't work. I get it. But if we look at from where this structure is, okay, we're looking at 5 of the most lowest kind of structure-based fractals back, plus a 13 pip minimum ATR. That would be from here, 13 pips. It's right around this range. Coming back up. Smidge, kind of give you an idea. And from here, same kind of concept. So in that range, 13 pips is going to be a little bit too fast for my britches, kind of give you an idea. So we're within that range, if you will. But I get it. This one and USDJPY, I'm not counting in the actual totals. So I will show you exactly how I'm doing what I'm doing. It's just a matter of you being able to follow suit, follow the instructions, throw all the caution and all the questions and over analysis paralysis to the wind, and just try it, paper trade it, demo trade it, and see how it works. Otherwise, again, I still think this has a lot of room to the upside. Not a whole bunch. Let me minimize, give you an idea. We've got multiple double bottoms. I'm looking for this to at least give us a measured move, which is going to pull us into this kind of voided area. It's still the same target, just a different location. So from where price is currently at today, right now as we speak, I'm still looking for a good 127-ish more pips right into this range right here. I know we're zoomed in. I know the candles are ugly. Yes, I know what the candles look like if I zoom out. This is just for the purpose of showing a system that works if you choose to let it work. So that's AUDCHF. I'm going to take that off my watch list now. Again, you'll notice most of these have some room to play. So if you're interested in kind of following along, by all means. This morning in our scalping class, well, I don't want to call it scalping, in our trading class, we looked at quite a few cryptos and we talked about crypto for a little while as well. I'm kind of bullish for the short term on most of these crypto pairs. We've got a total of 380, okay, anywhere in between that and 540, I believe. Not a bad trade whatsoever. We're within range. We have some room for this kind of triple bottom to play out. I do think that this is a pretty big move and needs to be digested. It needs to, give us that pullback. I think judging by how some of the other things have reacted, I wouldn't be surprised to see it pull all the way up and break a high before we get that, but it's crypto, anything's possible. So again, great overall trade, easy peasy, not that difficult, don't have to know everything, can't even see the candles. So yes, I like talking about candles. I like talking about specifications and management and the really, really nitty gritty. But the purpose of these videos that we're doing, at least on Tuesday nights, is, well, every other Tuesday more accurately, is to show you, hey, you don't have to figure it all out. You don't have to be an expert. You don't even have to have 100%. You can make money in trading despite what the Wall Street gurus say, despite what everybody says. You have options to change your entire life if you're willing to put yourself out there and learn a new skill. So that's Ripple. Again, I'm still pretty bullish on this, but I would not be looking for any entry, at least on this crypto currently. Personally, I'd be looking elsewhere. Last but not least, in terms of previous narratives, this is the worst of the worst. Of all the 7 trades we looked at, man, did this give us a run for our money. So first thing I'm going to do is I'm going to get a little closer to the candles just so there's no question. We know that when we did that recording, and again, it's recorded, it's live, it's on YouTube, it's public. So we know we're looking for the 1 o'clock candle, which is all the way up here where that base is. Really hard to see through the boxes and all that good jazz. You also know we're protecting within 50 pips. So this is 80 pips. This is 62 pips. So I can't say what kind of management you're using. And yes, this formed exponentially more levels. So I get it. But that's why we give you the rules we give you. Or more accurately, that's why I have cultivated those rules for how to make this particular system work for me on a very low-key, couple times a month, 20-minute basis. I follow these exact same rules. So this is another huge swing. It's actually multiple swings to the upside, as you can see. However, if you have management in place, you should have got your pips. You should have got your 60 to 80 pips. That's why we give you the rules and the criteria. So regardless of whether you use this stop loss or that stop loss, you should have either been protected, had some of your trade, most of your trade, 30% of your trade, 50% of your trade, trailing stop, drag and drop your stop loss into profit. I don't care what methodology you use. I care that you pick one that matches your ability to handle the drawdown or handle the wins and losses. So this was the worst of them, and I ended on it because I want to start with it. So I'm going to clear the board again. I'm going to remove draw. Actually, I'm going to zoom out. There we go. You guys know where my targets were even from here. Well, here we go again. Yet another sell, possibly on the Simplicity system. We've got a nice impulse and we pulled back. I am looking for this to sell again. I know where my current targets are and they still do align. But for the sake of starting here, I'm literally going to, let's do it this way. I'm going to remove my draw, remove them all. Hit this again. I'm going to zoom in. So now let's talk about trade analysis for the next couple of weeks. First off, let's talk about the rules. We're using the 1 hour time frame for these trade analysis. We're using the Simplicity system. Really, really simple. We're taking it at the break of a fractal in most cases, or the break of a trend line. Okay, this is duplicatable and consistent, right? Our stop losses are above structure plus 1 ATR, and structure means the most recent highest peak. Okay, so if there's multiple ones, you're picking the highest one. You're picking the one that's going to give this the most room. If it's a little bit jaggedy, you're picking that as a level. There's no specific price point that has exponentially more value than the rest of them. They all have a value. So take it with a grain of salt. You know where your stop loss is. You also know that you're protecting within 50 pips, because we say 50 pips because all these pairs have different ATRs. Now, in general, I wouldn't mind that you were protecting within 2 to 3 ATR. You'll notice that varies dynamically between all the pairs. They are extremely different, and you'll see that as we pop through. But when we say protect, we mean if you have a standard lot size, for example, you have a 1.00 lot size, which is $10 per pip. That means you're going to close out of, let's say, 0.5 of that trade. You're going to close out of a portion. When we say protect, we mean, hey, you're up 50 pips. You're going to right click on your trade and apply a trailing stop and allow the system itself to trail your winning trade along the way. And of course, last but not least, you have the option to just simply keep your take profit really big and drag and drop your stop loss into profit marginally or just above break even. So win, lose, or draw, you're still coming out, you know, positive or above. Any of those methodologies work. I like personally trade management better. I use a system like this one to kind of give you an idea. So if I was looking to sell in this area, okay, kind of give you an idea of how my trade would be micromanaged, just, you know, for conversation purposes. My stop loss would be kind of coming above the most recent structure. I'd be scaling out of portions of the position along the way. And of course, I would be able to capitalize on the biggest part of those trades. So, and or go get more entries. And don't go get more entries on this system, but it's an option if you have the time or want to do so. First trade on the agenda for the next couple of weeks that I'd love to track and potentially profit from. If you're brand new to trading, please make sure you're in a demo account or paper trading. All of those links are in my link tree. Please do support those brokers. They withdraw on time. They're reliable, trustworthy. I've used them for years, you know, big amounts of money and small amounts of money, and they pass all the sniff tests. So it helps me and it helps you, because at the end of the day, it helps build a network. And that network shows, it gives us a little bit more footing, I guess you could say, in the market. A couple cents off supposedly for you and a couple cents for me supposedly, but you get the idea. So without further ado, I'm looking for a sell on USDJPY. So I'm going to zoom in. First off, let's mark up exactly what candle we're on. Okay, we are on the 2 o'clock candle. So this is 7:20, 2 o'clock candle. Today's technically the 19th, you know, US time, but we know that, you know, chart time is a little bit different than US time. We have a nice, beautiful, we broke below the 50, we retested it. We made an impulse move to the downside. We have failed to make a lower low. This is still an uptrend. And we broke a trend line, sure. So how far up can this come up? It can come up a long ways. First off, we've seen this continue to make higher highs, seemingly without end. Having said that, me and half of the other rest of the world is probably greater than half. I think it's like 93% market consensus is looking for this to sell down. So plan on them yanking this around a little bit. They have been doing so. The odds are they're going to continue doing so. But if I zoom in, there's really not another big fractal here. So what I would be looking for is at the break of any of this kind of structure, and I'll make this red just so you can see, at the break of this structure, dotted for pending, right? I would be looking to sell this down. There's no, I'm not going to wait to the break of this. That's too far. So I'll make sure I even write that down, sell at structure. This way I've got it perfectly in my notes. I know exactly what we have discussed on this call. That's really what I'm waiting for. If we pull back up anywhere into this range, I wouldn't mind taking a better entry, a tighter entry, or a larger entry. But in terms of duplication and being able to prove this across the board to the nations, this is a really great way to do so. So yes, this is on my watch list. This is one of the trades that I'm looking at for the next couple of weeks. Next, we've got gold, actually gold and silver, but silver's pips are a little bit different, as you guys know. So I'm going to stick with gold. First things, let's talk about correlation. It's been a topic of the day for multitudes of reasons, mostly because of crypto. But if any of you guys are watching the indices and or the US dollar and USDJPY, for example, they are all in theory correlated. Now, I don't subscribe to the train of thought that says, hey, you know, because this pair did this, this pair must do this. I don't believe that. I do believe they have a relation and have the potential to influence each other, not exponentially, not, you know, 90%. We're not looking at it like that. We're just considering it as a factor in our, you know, box of check marks. We're saying, hey, this is valid in this box. So for multiple reasons, including indices and the USDJPY, GU, and how the US dollar has moved, I'm looking for this to buy up. Now, granted, we've got another kind of wedge pattern. I'm looking for this to break above. So first things first, we've got a nice simplicity signal right here, which remember is just a rule-based system. That's all it is. What we're saying is beyond this price point at the break of this fractal, we are looking for a buy. So at the break of this fractal, of course, you can get a better price. If it never breaks this, you never take this, and then you never lose. Cool. You don't have to risk any of your monies. Perfect, great day. The days where you don't lose are just as good as the days where you don't play. So totally messed that up. I know what I was thinking, but the words didn't come out right. So gold is the next one on my list. It's what I'm looking for. My major target is going to be to fill this void. I am massively tracking this area. So my risk to reward on this pair is really, really good. Figure that's 900 pips. Even if my stop loss is down here with room, I'm still better than a 3-to-1 risk to reward ratio. And if I scale into this at all, I've got an exceptionally good trade. So how long this takes to play out and how much foolery goes into it, I can't say. I can just say I love it for a trade idea for today. Indices, first off, silver, same thing, but I'm not going to call it as a trade idea here. Just something to look at and consider if you're interested. Most of the indices have already played out, although I think they have room. I'm not chasing them. I will, however, discuss Australian 200. This is a great paying pair. It moves like an index, but doesn't charge like one, right? So it's a good indice to get your feet wet a little bit. It's a good indice to get comfortable with, I feel like, for many, many reasons. But nonetheless, this has moved a decent amount already. How many ATR since we've got this buy signal? Let's try and show you together. It's moved a fair amount. So it's 1,000 pips. We've already at 5 times the ATR of how much this has moved. So overall, I'm looking for this to give us this breakout. Judging by how some of the other pairs have moved, we're going to come into somewhere into this range. But I'm saying, hey, we break beyond this point, okay, that 6738 area. Please don't take it as a price point. That's silly. We're breaking beyond these fractals. I'm looking for this to buy. How much am I looking to buy? Simple. I'm looking for this to come up here and fill this void. It's about 4,600 pips, at least 3,500-ish pips. This is where I'm looking to take it. You know you can protect this pretty quickly. You can protect this within that 500-ish pip range, 700-ish pip range. Either way, I see this as a really safe way to get 1,500 pips. For those of you guys who don't know, at a pip value, $6.90 per standard lot, 1,500 pips is a lot. I'm gonna give you guys an idea. This has a lot of potential. Now, granted, it's an expensive pair to trade in relation because of how much it moves. So depending on what your stop loss is, that's too tight of a stop loss if you're asking me. I would want my stop loss here plus 1 ATR of room. So I'm looking at the major part of structure personally. Can you have it tighter? Sure you can. If it makes you feel warm and fuzzy and safe. For me, I'd rather give something room to breathe than have it so tight to make myself feel safe and then lose anyways and have it, go in the right direction. So my stop losses are typically further away, but my accuracy is really good. So I can afford to do that. Now, of course, you're going to have to tailor these concepts to your trading, your skill level as you go and as you grow. So that's next on the list. Wow, a little yappy tonight. Australian chef. Let's go take a look. Same kind of concept. We've got one wave, we've got two. I'm looking for another one up. We know where the target is, same concept. I don't need to mark them all up. I can use whatever method we need. Let's do trend lines this time. I'm looking for this to come all the way up into this range. So great potential buy. The rules are simple. We've got a simplicity buy arrow. We're saying, hey, at the break of these fractals, I am buying. I am protecting within 50 pips. I'm placing my stop loss at 1 hour structure plus 1 ATR. The ATR spring is going to be up to you, but I'm a pretty big, supporter of that concept because it just gives a room for the springs, and then ta-da, viola, you're done. But this is next. EURNZD. Let's take a look. I looked at quite a few pairs. There's a lot of good setups coming down, I think, right now, but some of them have already either made too much of a move or we're waiting on a pullback. So for that reason, I'm sticking with this Euro pair, and also because we have no other NZDs on the agenda this week. So for that reason, we've got a nice diversification. We're at least not over leveraged per pair. So EURNZD 1 hour time frame, nice, beautiful simplicity signal. We've got our impulse. Yes, this pair is very wicky. We have broken above previous high. We have retested the previous, breakout zone. This is a great area as we speak right now. If you are the retest kind of trader, the person who's draws the perfect box to say we break out and we come back and retest the zone, this beautiful wick you're seeing now is a perfect entry. If that is not you, and it's totally up to you, I would be looking at the break of this fractal. It's later, but it's also confirmed. So I think both of them have an advantage. They both have disadvantages as well. Ultimately, which style you choose, to enter here means your stop loss is going to be tighter, but you're also buying when the market is selling. So there's, counter narratives to every which way you try to manage. It's going to be up to you. I'm looking for this to buy, so I'm going to put that on our watch list. We know what my target is going to be. We've already discussed it. It's going to be up and around this range. easy peasy, only upon that breakout. So can you take it here? Sure, you can. It's not a bad area. My stop loss is going to be at structure. You're probably looking somewhere around a 2-to-1 risk to reward ratio, which is not a bad way to be. Last but not least, a little edgy, a little iffy. Let's see if I can find it because it's not highlighted. Dun, 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 dun. Maybe, potentially. EURAUD. EURAUD. First off, I'm already in this trade. It is consolidating very, very heavily. I like this trade for a multitude of reasons. First off, look at all this consolidation. Another buy signal, another buy signal. These are both simplicity, rule-based reasons to enter. So we have yet really to break structure to the downside. Our most recent spring was to the downside, trying to wick every single person out. So overall, even where we're sitting right now, let's do something a little different and say, okay, so what if we're wrong? What if this trade is not ready to buy? What if this goes the complete different direction and we are dynamically exactly the opposite side? Okay, cool. What is our risk versus what is our reward? The cool thing about taking a breakout trade or a consolidation trade like this is figure our most extreme possible low is about 89 pips, plus an ATR, you're looking at about what, 115-ish pips from our most extreme low that we've seen in, I don't know how many days this is. Hold on, let's find out. A couple days, couple weeks, more than a week, right? The most extreme low that we can go up of in the last week is what, 150 pips, 115-ish pips away. Cool. So what's our overall potential? So our overall potential, we're still looking at somewhere around 500-ish pips. And if I really zoom out and make this ugly, we're actually looking at maybe, let's pop up a time frame for conversation. We're actually looking at a little bit more. I'd be looking at coming all the way up into this range. Now, is it going to happen in a straight shot? Probably not. Almost definitely not. But we have room in this pattern that we've got forming. So back to the 1 hour. If we're wrong, what is this trade going to cost me in relation to how much I'm investing into this potential trade idea? Not much, especially compared to the other pairs we just looked at, which have way bigger stop losses. So overall, I find this to be a really simple decision. And you can, of course, have it tighter using this kind of zone of fractals. This zone plus 24 pips, that's plenty too. Ultimately, it's going to be up to you. That's 45 pips, figure another 25 into that kind of the ATR, the 1 ATR spring, giving it some room just in case. We've got a really potentially tight stop loss. Very, very. Particularly if you chose to enter now. You're looking at a 25 to 30 pip stop loss for an easy 500 pip gain. That is absolutely incredible. That's, I don't know, I can't do math in public, but it's something like 50, what is it? 14 times your risk and reward. So that's not a bad way to be. With that said, those are the only pairs I've got for you. The only, that's a lot. It's 1, 2, 3, 4, 5, 6 pairs. Not to mention the ones we looked at the beginning of class that still have a lot of potential. So if you're watching this and you're following along, I hope that you are at least getting a demo account. I hope that you are at least considering what this industry could do for you. You don't have to buy anything from anyone. You don't have to sell anything to anyone. You don't have to do anything except for have a computer, learn a skill set, and that's it. So I love this industry. I love trading. I'm really passionate about showing people that you can do this, that yes, some people get lucky, but at the end of the day, it's still just a skill that you can decide you want to learn. So I wish you all the best on your trading journey. If there's anything particularly you'd like me to cover or go over, please do make sure you put it in the chats. Otherwise, happy trading, and I will talk to you, I guess that's next month. Take care and God bless.